Greece current account surplus shrinks. In January,
Mexico first half month inflation came in at 0.14% below expectations, 0.2% in March. Mexico first half month core inflation meets expectations, 0.24% in March.
Gold looks clueless on Monday after US officials ease on reciprocal tariff.
Euro, DERI US dollar recovers to 1.850 after mixed European PMIs.
Danish business confidence falls in March.
UK private sector growth hits 6-month high.
Forex Live European FX News Wrap. Dollar a little lower as risk sentiment picks up. Gold orbits around daily pivot with traders mulling reciprocal tariff comments. C100. Modestly higher in cautious trade. After PMI data.
Eyes on tariffs once again, but US PMIs will be a highlight as well. euro US dollar is higher in trading today, as there is modest US dollar selling on less Trump tariffs.
United States Chicago Fed National Activity Index climbed from previous 0.03 to 0.18 in February. Euro mixed after European PMI data. Bay Street likely to open with positive bias. February U.S. National Activity Index plus 0.18 versus 0.03 prior. Euro US dollar flat after surprise uptick in Chicago, Fed activity tracker. February U.S. National Activity Index plus 0.18 versus 0.03 prior.
Euro US dollar is higher in trading today as there is modest US dollar selling on less Trump tariffs.
United States Chicago Fed National Activity Index climbed from previous 0.03 to 0.18 in February. Euro mixed after European PMI data.
Eyes on tariffs once again, but US PMIs will be a highlight as well.
Bay Street likely to open with positive bias.
Greece current account surplus shrinks. In January,
Mexico first half month inflation came in at 0.14% below expectations, 0.2% in March. Mexico first half month core inflation meets expectations, 0.24% in March. Wall Street set to surge at open.
Dogecoin remains brand leader in meme coins. Fei Chen, founder and CEO of Intellectia AI. Future pointing to sharply higher. Open on Wall Street. Euro US dollar analysis slips toward key 1.0800 support 24 March 2025.
Gold analysis, will prices rise to 24 March 2025?
Oil firms as market weighs Iran sanctions and talks over Russia-Ukraine ceasefire.
Oil prices edge higher on optimism over Trump's tariffs.
Euro-US dollar analysis slips toward key. 1.0800 support. 24 March 2025. Dogecoin remains brand leader in meme coins. Fei Chen, founder and CEO of Intellectia AI.
Gold analysis, will prices rise to 24 March 2025?
Future pointing to sharply higher. Open on Wall Street.
Euro-US dollar flat after surprise uptick in Chicago, Fed activity tracker. Wall Street set to surge at open. February U.S. National Activity Index plus 0.18 versus 0.03 prior.
Euro-US dollar is higher in trading today as there is modest US dollar selling on less Trump tariffs.
All right. All right, yo. Wasabi! Hey, everybody. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So what's going on? How you doing, huh? Did you answer the poll? Hope you did. So today, we will take a look at the markets. Let me know if you're risk on or risk off, and then I will address that. Let's see how many people have answered it. 45 people. All right, cool. That's enough. So let's see what you think as market sentiment. This is a sentiment gauge. Most people are risk on. Some people are very risk off. Huh. So that's kind of interesting, huh? Most people are risk on or very risk on. So risk on 62, very risk on 17. So what is everybody else afraid of? Usually it's the unknown, isn't it? So we can go through that. Faux show. But today's news calendar is nothing. Okay. Wait, you only have sound on one speaker? Is that right? No, that can't be. But anywho, nothing on the calendar today. German IFO tomorrow. And then British CPI way out Wednesday. So everything's pretty, it's a cool market. Take a look at any scalps that are kind of popping their heads out, rearing their ugly heads. Yeah, a little scalp into support, maybe a breakout on the rand. Little breaks and stuff like that. Why don't we change this to more like 75%? Yeah, so up into resistance, down into support, back to resistance, back to this resistance. Okay, lots of little. Okay. Yeah, okay, so everyone says you can only hear me on one side. That's interesting. Let's see if it's a setup issue. Down mix to mono. No. Huh. Well, Hills Bells. I don't know, bro. Yeah. Yeah, I don't know. I haven't set it up that way. In stereo. All right, so lots of little skippity scalpity things that you might want to take a look at. A lot of pound. Makes sense. So here we are. The stock market's about to open. Just want to take a look at implied vol highs and lows for us. Here we go. So what are we looking at here? The next 4 hours. So that's the market open, let's say. Between 57 and 57.60. Okay. So 57 as a low, 57.60 as an implied high. 57.60. So keep that in mind. Maybe look for pivot points in there. You can see that we have volatility this hour and should improve for the next couple hours for Mondays. So the way I'd probably look at this if I were me is sort of that we'll top out and then fizzle out around 57.59. That's yes. Yeah, too bad we don't indices here. Just burning through the currency pairs. Many of you are Forex traders, right? Euro pound up, pound yen down, Kiwi dollar up, dollar CAD up, euro dollar down, gold up, Aussie dollar up, silver down, Aussie dollar positive, pound dollar, and then everything else is neutral. And by what I mean is up or down or bullish or bearish or whatever, just the sentiment in the market based on what the media has been writing about these assets over the last 7 days. So we just read, just like that, hundreds of articles. Yeah. But now we know what the market thinks about euro pound. Okay, it is positive and has been positive a while. Okay, so in the last 7 days, only 11 mentions of this. It's not a highly traded asset. Maybe it is, I guess. I don't know. But not many people are writing about it. That I do know. Yeah, 21 articles on 3 different websites about Kiwi. So this one's just moderately positive. But look at the decline in the interest in owning gold. So really, that's not really what's happening. 86 articles on 5 different websites, and they just feel less positive about owning gold. That's all. But we went from a 58 down to a 27 in just the last 7 days. That's quite a decline in sentiment for gold, isn't it? Now, I can tell you, I already went through the commitment of traders report. The market is still long gold. We can look at the fundamentals of gold and discern whether we should be very bullish or neutral or bearish or very bearish. And the cool thing is, sentiment may be different from what should be, or what you would expect logically. It's like what you know and how you feel could be two different things, right? I know it's just a movie, but I'm afraid, I'm scared. Okay? So ideally what you do is line things up. Cool. Hey, would you guys use this service if it was free? Well, if it wasn't free, how about if TRADARS was half price? Would you use it? Would you use our sentiment analytics, our fundamental analytics, our technical analytics, our performance coaching? Would you use it if it was half price? And what if it was free? What if it was free some months and half price other months? Would you be part of the community? Yeah, well, I'm working on that for you. Baby's in. Sure. That's why I'm trying to create a rebate program, Derek. Yeah. Yeah, and by the way, normal people, that I suppose that means abnormal. No, I'm normal. Yeah, I grew up as a child, and in our household, $5 was a lot of money. Like a lot of money. Yeah, and Steve, that's a big part of what we're doing. So we have we have people in Australia that are subscribers, but it is very expensive in terms of Aussie dollar relative to US dollar. But the solution now is, there's the best way to kind of cheat the system, if you will, or financial engineering, Steve, is to buy the annual membership because it's cheaper, and then go into the rebate program so that every month you get 200 US dollars. Well, the thing is, if you think the Aussie dollar is going to weaken relative to the US dollar, then getting piecemeal back every month, every time, if you're correct, the US dollar is stronger. So you're getting more Aussie dollars back. Plus, you got the annual subscription, right? And then if you go into the prop firm, you get an even bigger thing. And then you get some dollars to trade with. And you're like, all of a sudden, that's what you need to do is if you think the Aussie dollar is going to weaken over time, you need to convert it sooner than later. And that's one great way of doing it. Right? Pay with Aussie and then get rebated back in USD. Plus, if you do the prop firm and you get 20,000 USD, you're trading that, getting profits, and then converting that back into weaker Aussie. So that's another way. So maybe you make $500 a month as a TRADARS subscriber. Okay, cool. Now you're making USD, converting that into Aussie, you know? Yeah, this is a good week for risk on, for sure. So I already started tiptoeing into many of these things. I guess we can look at this. I just wanted to, and I wanted to show quantitatively, you know, like the way you answered the poll, are you risk on or risk off? There's a way to answer that quantitatively, and so it's not about feel. But we are now above the annual pivot point, and we have put in a floor, and now we have a new, what used to be resistance is now support. And so we are starting to climb. So having seasonality is a big part of, you know, of course, what I'm doing here, right? Because as it was falling, I was preparing. And this black line, of course, right here is the yearly central pivot. So it makes sense to fall into a period in which I would like to buy. So now I need to find level of what I call hardcore support, and I find it, and we test it, it bounces. We test it again, it bounces. We test it a third time, it bounces. We test it a fourth time, and we're back on top. You see? It wasn't random. It wasn't degenerate gambling. It, you know, if you're ready, willing, and able, and you have the price in mind, and you have the time in mind, that's all it is price on the right, time on the bottom, and seasonality says somewhere between the middle of March and middle of April, you want to look for a turn. So I did, and I played it. Boom, 2, 3, 4. Boom. Now, down in here, TRADARS gave a short-term positive bullish pattern, and so I engaged. I didn't engage on a 4-hour chart. I engaged on like a 1 minute or a 5 minute. But that's, you know, Osamu's like week 13. I'm like, yeah, baby, yeah, because that's what all of this is about. Now, does it mean it will go up? No. Does it mean you could be ready for it to go up? Yes. We call that strategy. So my strategy was around week 13, be prepared. Around, not specifically, but around week 13, be prepared to look for a bearish stock market to turn bullish. So that's what I did. Now, a couple of hours ago, this was risk on, this was risk on, this was risk on, and we've lost some of that. So it hasn't quite happened yet. But we know, well, we believe volatility. How about this? We know volatility usually goes up this time of day. And the stock market just opened. But really, the reason I meet with the team at 7 o'clock in the morning is that's when you should be setting up your trades for the day. Waiting for the market to open like this, like waiting for 9:30. I'd rather you front run it or trade after the open, you know, sort of like a trap and break type strategy, you know, which tons of gurus teach. The problem is it's reactive. In my opinion, it's reactive. So I'd rather you front run, but whatever, right? Whatever. And so we're looking at, as the market's opening here, everything's flat, 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 flat. So I guess I would have to agree with 67% of you. Sorry, 62% of you. It's risk on. Not very risk on. It's risk on. And only on the long run. Right now we're vulnerable. We're sitting ducks. But you could wait throughout today and confirm visually whether the market is turning risk on in the shorter run. And that could give you permission to engage. Okay, Bitcoin working today. Look how good the score is on Bitcoin. Not long ago, we had a negative score on Bitcoin. Things have changed. And now TRADARS gives Bitcoin a 6, and it's up 3%. Now, the fact it's up 3% didn't make us bullish because the score is all based on macroeconomics. Okay, we have a bullish score. Remember, NASDAQ was basically somewhere between -2 and +2, basically neutral. It's a 7 now, y'all. Now, part of it is the seasonality for these things are changing. And so even though it hasn't been bullish, it's more bullish now. Okay? So gold isn't producing very much today, but look at our score. A 12 handle. A 12, baby. And sentiment is cool, right, on gold. It's bullish, it's positive, but not very positive. It's almost neutral. Gold isn't up very much. So we have a big score and not much action. So maybe in the next 24 hours, you might actually find gold declines and we get down here somewhere, right? Well, that would be a dip. So then you'd look at that and say, I wonder if that's a dip. We have a 12, but it's losing money. So I wonder what the daily or the 4-hour charts look like. Are we on or near the 21 EMA? If so, drop into a small time frame and start scalping long when presented with bullish patterns. Well, where do I get the bullish patterns? Right there. But you put it on your list. You're like, okay, I'm ready, willing, and able to buy a dip in gold. So now I just need the market to show bullish patterns. See, if you're a bull and on the long term, quantitatively, we're bullish. But on the short run, gold is down, then it's out of position, and you may have an opportunity to buy low. Great. But when do you pull the trigger? When technically the low is now turning bullish again. Now you have long-term bullish quantitative analysis with short-term bullish technical patterns. Oh, snap. You see where I'm going with this? Complete holistic training. You have a complete ecosystem now. And once again, I'm trying to make it free for you, and I'm trying to get you money to trade with. Yeah. So that you can make decisions like this. And have a team of performance coaches to make sure you have the ability to ask questions, huh? Isn't that sweet? Oh my God, it's totally sweet. What are you thinking? Okay, S&P 500 is now a 5. That's way better than it was a few weeks ago. NASI's a 7. Russell's still negative. But we had a Fed meeting the other day that said that they still want to cut interest rates twice this year. If that is indeed true, then Russell will benefit the most, and we call that duration. The sensitivity to changes in interest rates over time. Cool. So small business that leases their cars, leases their equipment, leases their buildings, their lease payments, the interest rate on these leases are variable, and they're tied directly to treasuries and the Fed funds rate. So if treasury yields are coming down, the Fed funds rate's coming down, then the cost of doing business as a small business in the United States falls and your profits go up. If nothing else changes, just your cost of doing business falls, then that's profit that can be put to hiring more people. That's profit that can go into R&D. That could be profit that is just spent through ownership distribution. So now the owner goes out and buys a nice house simply because the Fed cut interest rates. Yeah. And that would be helpful. It's expensive to run a small business. So if some of the expenses come down, great. All right, so you guys are subscribers and you subscribe with a credit card. Did you know American Express has raised their fees, their processing fees, by something like 23%? Yeah, that hurts a small business. Yeah. So you want fees to go down. Yeah, but that's a big increase, though. Hey, Jim, like, what's our inflation? 3. So for expense for an expense like that to go up 20%, well, it's more than inflation. Yep. All right, let's look at our majors. Okay. Dollar weak, dollar weak, dollar weak, Kiwi dollar weaker, dollar weak, dollar weak. So yen is weaker than dollar, and Kiwi is weaker than dollar. Ooh, so who's weaker, Kiwi or yen? Okay, yen is the weakest. What do you think? Remember, we hit a lot of targets on the yens. Is it over now? Well, what's normal? Why don't we look into that? What's normal? Let's take a look. Let's sort this. By the way, did you click the thumbs up button? I think that does something. I don't know. Does it tell YouTube this is good? I don't even know. All right, let's try euro dollar. What's normal? Okay, euro versus yen. What's normal this time of year? We bottom out in February. March's recovery, April and May are good months, and then somewhere between May and June, we top out. So what do you think? Somewhere between February and March, we have this recovery. So let me draw the recovery, and I'll do it in gray to kind of match. Okay. Okay. So think of it this way. Connect, connect, connect. So somewhere in the middle of May, let's say, you would take profit on your euro yen. Doesn't mean it can't go up, but the next sort of trend is down. And then somewhere around the third week of August, right, somewhere between the third week of August, third week of September, I get going again. And then somewhere around 12/12, I take profit. See, the whole year is planned out. And some poor slob of a amateur trader doesn't know anything. And a professional institutional trader has the whole year planned out in advance. Which one do you want to be? So that's why I'm trying to democratize, and make TRADARS as affordable as possible, even free if necessary. But by free, it means you're actually using the data. So if you can open a small trading account and have us execute, then I can rebate back to you, and it's at least maybe more affordable. If you have a small account and you only do two or I don't know, three, 4, 5 mini lots a day, then TRADARS will be half price. I think for most people that's fine. Okay, good. So I want every person to be part of that program. And at the very least, TRADARS is half price. And you can have 5 hours of performance coaching a day. Cool. But here's the thing. This is the way you need to think about it. You're trading a real account, whether it's prop funded or not prop funded. You are trading, but now you have a team and you have infrastructure. That's how I want you to look at this. This is not a YouTube guru type thing. You have a team and you have infrastructure, and you're learning and trading like a sustainable small institutional trading firm. You make institutional quality decisions. You have a team of experts at your side, hours and hours and hours a day. You have a Harvard-trained economist that goes over the fundamentals and technicals every single day. Like, this is it. This is a legitimate business opportunity for you. That's how I look at it, because I'm a businessman. I always have been. Forex is the first thing I ever traded. Before that, I was a venture capitalist. Before that, I coached CEOs. Yeah, pretty simple. Before that, I ran a company of 3,000 people. Yeah, all right, great. So this is how I look at it, and it's my intent for you to start trading like a sustainable business with a real team surrounded by experts, surrounded by data. Everything you do is intelligent. You are Illuminati. Right? You don't have a Harvard degree, but someone on your team does. Okay, you see what I'm getting at? So I'm not going to go over this today because you should have already gone over it either this morning or over the weekend. If you haven't gone over the Commitment of Traders report, okay, then you're back in amateur hour again. That's just the cruel truth. Don't mean to be cruel. Don't be cruel. Still heart that's true. I don't be cruel. Thank you. Thank you very much. Oil. Oil going up. Okay. There's a period from the March, April. Okay. Somewhere March, April, crude oil bottoms out from a decline and goes up to sort of the May, June period, which, when you look at the history of peak oil inventories, it's June 1st. So somewhere between May and June, okay? Somewhere between May and June. Well, let's think about it, Derek. I've been recommending Traders Way for over 10 years. Wonder who it could be executing your trade. Yeah. Now, I have something that actually I have a couple of things that I'm working on that are going to be like a super secret bonus coming up, if I can technically do it. Problem is, what we want sometimes is terribly, terribly difficult and expensive to make. Like, let's say you wanted a Bugatti. I saw a guy on YouTube, he bought a used Bugatti, right? And he made the seller do something like $200,000 worth of work on it before sending it to him. That's a lot of work. It needed things like a tune-up and a detail. Yeah, $200,000. But then the car shows up and he's super happy with it. It's beautiful and stuff. Then he looks at the tires and the tires are worn out. And he's like, uh-oh. So he tries to find tires for this car. And the 4 tires, just the rubber, not the wheels, 4 tires, $40,000. All of a sudden, you're like, dude, you don't want a car like that. But, so we like fancy things. We like a lot of things. And I'm working on some tools that might be awesome. And I might be able to give them to you. I'm working on a way to actually build them and not have it cost like a Bugatti. Okay. But I can't even tell you what it is. Some of you already kind of know. But join the program, and there might be something awesome around the corner about to happen for those that are in the prop fund. Oh, don't be cruel. Cool. So anyways, oil's not ready yet, but it's likely to change its tone soon. That's all we know. Somewhere between March and April. So what I've been saying for weeks, if not months, the end of March. We're pretty close to the end of March now. And notice that even though we don't have a bullish score, we're neutral. You can see seasonality says it's not ready yet, but we know end of March, whatever has happened, has a high probability of changing. So the -1, we expected that at the beginning of the March. Well, I think March is dead, by the way. I'm already well into April, May, June in my thought process. When we finished quadruple witching on Friday, we ended first quarter. Okay? We ended the first quarter. First quarter's done in my book. We're done. So we're already April, May, June, or you're behind. No, Derek, but we do have an option for that. But why don't you go through and apply? It's $49 to apply, and then we'll get you going. Where's the information? How about right there? Okay. The site is still going through updates to clarify and build the sign-up process, but people are signing up for those that are already members. But there'll be an updated new way for the future. But if you're like, oh, I want the prop fund, but I'm not a subscriber to traders.com, forget it. You're out in the cold. But do you know how much I charge? Nothing. So it's a pretty good deal. It's a pretty good deal. I got Elvis. Got Elvis in my brain. So here's the thing. You still need to think. Okay, you could be a cold stone and say, "Oh, it's neutral." Okay, fine. It is neutral. Now you can wait till April, and maybe, if I'm correct, some of these things turn bullish, and then you can, catch up. But since I'm thinking this, I'm anticipating that by the end of March and early April, it turns bullish. Well, look at the score. We went from -5 to -1 in the last 24 hours. Well, 24 hours of trading. So since Friday, since quadruple witching, since the end of March, see, again, I'm already in April mentally. So I'm April, May, June. Great. What do I know about April, May, June? I buy oil and I hold it for 12 weeks. Shut the back door. Oh, you can scalp it if you want. You can compound it. You can buy and hold. The thing is, do you have a half-decent strategy? Those other things are just tactics. Tactically, look, if you got direction right, it's a lot easier. So I'm thinking ahead. I'm like, okay, this has gone from -5 to -1, and I think in 3 weeks we're going to be positive. Oh, look at that. The 2-year dropped below 4% again. That was critical. Do you remember talking about that? Very cool. So anyway, so how do you put that into a trade, you ask? Well, first of all, how would you grade this? Because I went through a similar process with the S&P 500. How would you grade this trade? I got my stop at break even. Okay. A is the best. F is a total fail. Yeah, some of that sounds right. So I'm going to have to do that. Jordine says yes. A plus. Okay. Look, and I'm not doing this like, hey, Matt, I'm an only child. Shower me with love and affection. There's some of that, but that's not why I'm saying. I'm trying to anchor in your subconsciousness that you can do this. You can have that level of accuracy. Now, is it easy? No. And I might be 20 years of trading in front of you, but I had this planned weeks in advance. And everybody at TRADARS knows because we talked about it falling. I run a group called the Council of Investment Advisors, and they help me manage real money, right? And help me influence my management of endowments, which are real money. And when we met, we left our current cash of cash, and we left it the cash in the cash of cash because we believed the stock market would fall. That is the God's honest truth. And they gave me permission to buy the dip. So I could be, right? I could be here. So, multiple groups know that I was waiting, well, for the Fed meeting and quadruple witching, waiting for seasonality. Then I find myself, triple bottoming on the annual pivot point. Am I the first one in? Okay, maybe. But it wasn't random and it wasn't guessing. Okay, so now let's go to oil. Grade that one. So I just went through this whole oil process. It's not even bullish. So why am I buying? Because I'm using the analytics, the fundamental macroeconomic quantitative analytics, to have theories based on data about the near future. Not just entering, but how long I can stay long, baby. How did I do? March 10th. So now, what is it, March 24th? So it's been long a couple of weeks now. How we doing? Talk to me, Goose. Okay. And remember, it's all based on trying to make intelligent decisions. I do not know the future. I am not a perfect trader. I'm not trying to push any nonsense like that. What I am trying to say is you have to have good data and then use the gray matter between your ears. Is that easy? No, but that's why you get paid. Cool. That's good though, isn't it? Like seriously, this is good. I am very happy with what we've built. Osamu says that one was a risky trade. No, no, no. I took the double bottom. Yeah, I don't buy the one touch. Okay. Yeah. The next one, when you get the higher high, then the higher low, and then the next one, higher high, higher low. This was a real stress test right here. This move, okay, was a stressful one. But what we ended up doing is changing the pattern, right? So think about how TRADARS does technical analysis. Okay. It would have had this as a bearish channel. Okay. And then consolidation would be the second pattern. And then maybe at some point even made this like a head and shoulders. Okay. And now it would be printing a channel. Okay. Or a variation of this, right? No, I moved my stop to break even. So just so you guys know, like if you don't know me that well, my stop was way below that. Yeah. I don't believe in tight stop losses. What are you so afraid of? You probably don't have enough money. And that's a real fear. You should stop trading. Save your money and practice on a demo account, build up your skills, build up your funding, and then come back next year. But at some point, it was profitable, right? So what I did was I move it here. Now, why do I not move it above, or why not put it right on the number? Okay. I record every such situation like this as a failed trade. So if I wake up and something happens while I sleep tonight, and this happens, I want to record it as a loss. Then you're like, well, Wayne, you're already up, you know, I'm up $3, right? The equivalent of 300 pips. Why not get out? Does anyone want to answer that question for me? $467. All right. Okay. I don't remember. Well, that's too esoteric though, Brian. Like that is, and same thing with baby. You know, like yeah, but that's like okay, great. But what is my plan? It's not because then letting your winners run is correct, except you never know when you get out. So that's trend trading where at some point you move your stop. But trend traders tend to leave their stops way too long. You might even disagree with me. You're like, Wayne, you're at break even and you have 300 pips profit. Well, that wasn't the plan. So go back to what was the plan. This is a time-based, although I do have a limit somewhere on this. It's a time-based, there it is. There's my limit. If this goes to $99 a barrel, I'm going to take profit. Hey, you never know, dude. You never know. In particular with oil, you never know. You can just wake up one day and oil jump $30. No, it's not very, very unlikely, but you might, yeah. What this trade, the entry and the exit are both based on time. So let me answer this differently. My target is not a price. What's my target? I don't think this is going to go to $100 a barrel. I just have it up there because you never know. What is my target? I've already answered it specifically using this page. So let's go here. How long do I hold oil? It's not technical. Al says seasonal. Yes, you have the data in front of you. Let's zoom in. It tends to peak in June. So maybe early June. No, I wouldn't say end of May because it goes higher in June and then cools off by the end of June. Okay. Now, for those that have gone through my oil trading course, which is only 16 hours long, they understand that this is related to the business cycle of oil refineries. And then I teach you how oil refineries work. Before that, you learn how the oil patch works. And you know the difference between a heater treater and a vertical separator and a meter run. These are all terms. When I say Christmas tree, you know what I'm talking about. Before that, I teach you how to drill oil. Actually, how to drill the hole in the ground. And is it horizontal? Are we going to frack? Well, I have to teach you how to do that. And you know, a logger works in the oil business. but doesn't cut down trees. You know what a quagmire is? You know what mud is. It's not dirt. And then the geology. I teach you the geology of oil. It's crazy. It's a great course. I love it. And so when you put it all in the context of actually knowing, so you're like, you're not just an oil trader, and to you trade MACD on oil. I like the MACD on the WTI. It's real nice. Dude, you know how to shoot. Yeah. And not guns, sound waves. Yeah. You know how retail works. You know how the legal contracts work for mineral rights and land rights. It's a really cool course. So anyway, so you look at this and you understand it's not just red mean, or, this means down, this means up. No, you understand how the entire industry works. Yeah. Ooh. Holy schnecker. Yeah. And you also appreciate why World War I wasn't about all the crap you were told about in school. World War I was about oil. World War II was about oil. Sorry. Huh? The conflict with Ukraine right now is about oil. Don't be fooled. So anyways, you got to know oil if you're going to trade oil. You got to be an oil man or lady. And you need to understand these things. And guess what? You have good data. Yeah. So am I early? Yeah, I might be early. But if I felt like I could, if I survived this, I could be long oil for 12 weeks. I just have to be careful here. The last 5 years has been brutal in April. It's supposed to be down in March, but it's been more down in April. Is that going to happen now? Maybe. I don't know. I don't know the future, but I won't lose any money. So, I mean, okay. So now I have opportunity cost. Do I take my 300 pips? Well, if 300 pips is 2 weeks, then if I'm in 12 weeks, I could probably make more than that. So now it's just opportunity cost. So if I survive this, I'll probably be long and strong. And Canada Day is too late, according to the data. So June-ish, sometime in June. It's nice, isn't it? Be able to make decisions like this. I mean, if you want me to just stare at charts and tell you this. Oh, we got a glitch in the matrix. Okay. Yeah, oil's going up. I know. I knew that for 2 weeks. Cool, it's going up today. I know. I've been long for 2 weeks. Now, to predict this, I think is a little more difficult. So I use price action. Okay. And the idea here is when it drops to this level, you can buy it, and then you want your stop probably lower than this zone. Okay. And if it makes a higher high, so let's say we're going to test 70 today. Okay. Then well, we won't do it that quickly. So let's say we make a higher high, 69.5, come back, And then somewhere around 69, we buy again and then maybe get there. Okay, good. That's it. Would you rather me just do this all day? Some of you probably would like that. The problem, I think, in my humble opinion, is that if you don't expect it to go up, then you don't know it will go up. Therefore, you're reacting. It has to reverse from bearish to bullish before you act. And when it does it, you may not believe it because you may be looking at the wrong time frame. So is there a long-term chart involved in your analysis? I don't know. Are you looking at the business cycle of oil refineries? I don't think most gurus on YouTube trading a 5-minute chart do that. Correct me if I'm wrong. Now, I recommend that you understand the whole entire oil industry. That's how insane I am. I think you should know absolutely everything. Okay? You know what bitumen is. You know what heavy oil is. You know what synthetic oil is. Okay? And therefore, your 5-minute chart makes a lot more sense. Even the international political economics that I've been describing for the last few weeks really, I think, impacts this. Do you read the EIA inventory reports or the API? Do you read OPEC? Do you know the difference between Venezuelan oil and Saudi Arabian oil? These are all really good questions, right? Yeah. You should if you're going to be an oil trader, in my humble opinion. Okay? But let's zoom in. Let's double check this setting. 55 exponential. Let's put another one in there. I mean, I want to make that 21. How about that? A little bit better. And then we can go insert indicators, custom. I'm going to put in a 0 lag. And okay, that should be fine. And that's where we are. Okay. All right, so you can see it's predicting more bullishness than before because this is where this fatter red line will be in the future. Okay. So when you're looking at the longer term charts, like look at this, how it used the 21 here. So I think I'll leave it here. If you are a scalper, okay, then I would be trading knowing that this, let me do this in yellow. Okay, that this is your area of opportunity. So the higher high, this is your roll reversal. This is where the longer term, well, in this case, only an hour, but your 1 hour moving averages are. And that you have a higher low. Okay, no higher high, right? Until we get there. So you would have seen something like the pattern would have looked like this. Then you got the breakout and the pullback off the movie, right? This is where you should start scalping your 1 minute chart in your 5. So let me mark this. That's where the moving averages are. Now, this is based on price action, not moving averages. One's leading, one's lagging. Okay. And this is how you should be doing oil. Okay. And then you're going to rinse and repeat. If we make a higher high, then you're going to do exactly what I just said, and you're going to do it this way. Oh, look, I already drew it. I know. I know. And now you should be scalping. The thing is, never short. Was that too quick for scalping? The scalping version of a scalping course? Yeah. Do you want me to do another one for you? Or do you want me just to do the technicals of it? Why don't we just do the technicals of it for a second? Where's my TRADARS? Okay. All right. Let me bring this back in. So let's say this morning you were interested in trading oil. Okay. So you wake up in the morning and the first thing you want to do is analyze oil, and you're a bull. Oh, yes, Guy Killer. I love the fundamentals, but I also love the technicals. I love charts. Charts actually make me feel happy. Okay, but okay. So you wake up in the morning and you're thinking about buying oil. You've already done the oil analysis that I did. I don't want to repeat that. So you know the market's neutral, but you expect it to go from neutral to bullish soon. So you're a bull, but not necessarily today. But you're ready to be a bull today. And you're waking up, logging in for the first time. Do we have sentiment on oil? Let's see. If not, if I can get it. I think we do we? Currencies and oil. Oh, wait. Let's see if I can get this. I guess there's just too many different ways to call it oil. Too bad. Okay. Well, you can still go to the fundamental section and pull up I suppose bias, but you would already know that. So anyways, let's go to volatility. The implied vol will tell us the best time of day for you to enter your trade today, which may or may not be a different time than Tuesday or Wednesday or Thursday or Friday. Wait, you don't have it, or am I going? Good, interesting. If we don't have the data, I'll see if I can get it. Maybe it's just not turned on. We have it in the back. Is it not? Interesting. Let me look here. Ah, that makes sense. I turned it off. All right. All right. Thank goodness. U.S. crude oil. Beautiful. All right. So we're a bull, right? Price will not drop below 67, and the 4-hour low this time of day is 68. Best time of day is about 3 hours ago. Okay, 3 hours ago. Now, these numbers would have been slightly different, but the implied low for the current, okay, 68.62 and 69.66. On the 4-hour, 68.26, $68.25. Cool. So you see, a couple of hours ago, these update like every 15 minutes. You don't even have to refresh your page. It refreshes automatically in the page. But you can imagine 3 hours ago, we were in this zone. Let me do that in black so it's easy. We were here, okay? 3 hours ago was a red candle. Why do I say 3 hours ago? Well, we're here now, okay? In fact, you can see we're beyond 9:30, almost 10. So there's this hour and then this hour. So 3 hours ago, we were in a low vol period in which we expect an increase in volatility. You're only a bull, right? You there's nothing that can make you bearish. You have a bias. And so you're looking at periods on Mondays in which trading will pick up. So your choices are trade it in Asia or London lunch. You see? Which would be 3 hours ago, London lunch. And you're only a bull. And this is calculating where the bottoms are likely to be and where your stop should be. So you may have been trading all day and your general plan was this, and your stop is here. When you get to this target, maybe you jam your stop at break. So now you go into your skippity scalping. But let's go to commodities, and we'll only look at U.S. oil, and we'll only look at trending patterns for U.S. oil. And there it is. 28 minutes ago, there's one breakout type pattern, which we also just did on the charts. Higher high, higher low. And we're off we go. Next target, 69.36. Funny thing is, the implied volatility, I think, said 69.26. Seems pretty reasonable. But this is a trending pattern. So then the next thing would be this way. So if we're going to go to the psych level, we'll probably do that. And that's why I want to be a trend trader. Cool. So now, having done all of that, ooh, look at that. Look at that beautiful move. Okay. Now this all goes into context. Okay. Boy, see, someone could have had an entry order there, right? Stuff like this. And then boom, you would have got filled. And now you're like, well, how would you have known that? Well, that's what this whole thing is about. It's called price action. When you get a higher high, okay, And let me draw it out in yellow. When you get a higher high higher than this high, the standard operating procedure is take what used to be resistance and make it support. So the way you do that is grab this and drag it right. So could you just put a working order there? Uh-huh. Yep, you could. And so if we make a nice clear higher high, I can do it again. In that scenario, I like to have like an obvious higher high, not a slight. So I won't sweat bullets over a wick or a candle body, in particular on a 5-minute chart. I want a clear higher high, so like something up here, and now this is my next buying opportunity. And could I use the technique of dropping a working order there? Yes. Just make sure you use the OCO tool so that it automatically throws down a stop. But the thing is, when you look at this chart, and you have that level of detail of the seasonality of oil refineries, of international political economics, of macroeconomics, of seasonality. You have technical analysis telling you that this just turned bullish. You have a lot of data to go on. And now skippity scalping on a 5-minute chart should be, you should be more decisive, let's say, and less indecisive. Because you still have the big picture, the long term, you have the daily and the 4-hour in your brain. Okay, you know what you're doing. This makes a lot of sense. And now you're just executing short-term trades. Okay. Cool. Oh, goodness. Oh, my goodness. What a great day. What a great week. The news is pretty thin. The next interesting thing is really Friday. Yeah, we have some other things, but they're not they're not terribly amazing. So, I think the big thing is, institutional traders may be going risk on now that we're done with the first quarter. And remember, on Friday, every contract that expires, so futures contracts, options contracts, and the like, if it expires, it expired on Friday. So now everybody has already made their decisions of risk on or risk off for the next 1 month to 3 months. That's just how the markets work. And so we either witness that now, or we can't confirm it. Maybe it doesn't happen this year. Maybe this year is different. Great. But if you don't know the mechanics of how the market works, then I don't think you have a good shot. You're trading blind. I wouldn't want that. Illuminati. Cool. Now, Sky Killer says that the implied vol stuff, knowing when to place your trades is cool. Yep. The other thing that shows you is where to put your stop. And if you find your stop is too far away, it's because you're over leveraged and you should lower your lot size. So that's very good information to know. Also, think of it, if you are correct on your trend, okay, you've analyzed an asset up or down. If that's correct, and you're now quantitatively placing your stops, for example, below implied volatility low. So you're buying a dip because you're a bull. And then you put your stop below the implied low, which is a quantitative number. It was gathered not through feeling or conjecture, but based on what has happened in the past and what is most likely to be. That's why it's implied. Then it's very unlikely, based on past performance, for you to be stopped out. It's not probable. You will probably remain in the trade even if it underperforms. But for you to get stopped out, you would have to be wrong on direction. Your bias is wrong. Your timing is wrong. Something went wrong, but the market collapsed. And guess what? You want to be out. You don't want to get knocked out of your trades because there was a blip in the matrix, or you freaked out, or there was a little thing of news and, it dropped 30 pips, knocked you out, and took off again. Really? That doesn't sound like a boss. Okay? Are you the lion or the mouse? Okay? So cool. Right on. We have some good stuff. A good team, a good community with fundamentals, technicals, sentiment, performance coaching, rebates, funding, an all-in-one, right? All-in-one stop shop, an ecosystem, right? Cool. Very, very excited about our future together. Peace on earth. May the pips be with you. May your profits be above average. Remember to click the little remind me buttons on the future webinars later this week. They're all going to be at 9:15, except the one on Friday will be at 7:30, and that'll be over at FX Stream. So peace on earth. May the pips be with you. May your profits be above average.